Today we're going to analyze Salesforce. This stock has had quite the run up, and it has less to do with fundamentals and more about the CEO. Weird media tour where he's bashing everyone, kissing up to Trump, and starting a beef with Microsoft. That naturally has people curious about what this company does. Some of the people like bored of him are buying the stock rather than looking at the fundamentals. So today we're going to break down this company and see if the fundamentals make sense for us to jump in. Now, quick FYI, I really like this stock, but I'm going to see if this is something I want to jump into now or something I want to wait on and then jump into this stock when it hits a certain price point. But before I get started, please subscribe to Common Investor, like and share with this video as many people as you can, and most importantly, and with that being said, let's get started. Currently, we are going through a bit of a consolidation, but right now these are its current metrics. Now we need to figure out what will these metrics be by 2030 to get the stock price in that year. So let's get started with our research. So for revenue, it was making 15 billion 5 years ago to today making 37 billion. That is an over 2x increase in revenue. And if you take a look at the growth rate of the revenue, for majority of that time it was 30. Very recently, like in the last 3 to 4 quarters, that it dropped to 10, and as of latest earnings call, it dropped to the single digits at 8%. Now, the fact that we know that its revenue growth is at a decline, now we're going to try to see what its revenue projections are going to be. I read a few of these before the video, but basically majority of these articles are basically stating that it can have a compound growth of about 11% over the next 5 years. So we're going to see what ChatGPT thinks, what its revenue could be. So with analysts forecasting for the next 2 years, it could hit 42 billion. After this, the number stops. This is where ChatGPT does its analysis based off the market growth and its presence in the market and historical trends. So based off all of that, ChatGPT is saying its revenue could hit 56 billion by 2030, which to be quite honest, seems a bit low to me. Since it's analyst projection, we'll take that into account. Now let's look at Gemini. It's a bit out there. Gemini is saying it could have a revenue of between 70 and 78 billion by 2030. I feel like Gemini is being a bit bullish on this end, but not too much to a degree where I'm like, that's a bit too much. Next, we're going to take a look at DeepSeek. Its projections are very similar to what ChatGPT has at 50 billion by year 2030. Again, I think that's a little bit low. And recently added another LLM. This is Claude. So Claude's projection is about 57 billion, which again is right around what the other LLMs are saying and what the analysts are pretty much forecasting. So with all of that into consideration, I decided to go with above 55 billion, which is a 55% growth over the next 5 years. Next, we're going to take a look at number of outstanding shares. Now, this is the part I really liked about this company. When it was rapidly growing, it was printing out shares non-stop. Now that it's become a mature company, you could see on average, it's declining its number of outstanding share by over 1% every quarter. Now this number of decline will not last as the stock price gets higher and higher. The dollar amount won't change, but since the stock price will go up, the amount of shares they can buy back will decrease. Looking at those metrics, I decided to say that it will decrease the number of outstanding shares by 3%. Next, let's take a look at its PE. Now currently it's selling at a 45 PE, which is pretty expensive if you take into account that it's starting to have slow growth. It should be a lot lower. But if you take a look at its historical trend of PE, it's never hit a 30 PE ever. It's always been in the triple digits when it was growing rapidly. And as of late, since its growth has slowed down, it started to hit the 70s, 60s, and currently it's in the 40s. So based off of those projections, I think the PE is going to fall even more. I think we can expect this company to have about a 32 PE. I would say 35 is more reasonable. 32 seems a bit too low. At the time when I was making the projections, I was thinking 32 is a great PE to give it. But looking at the chart now again, I think 35 is more fair. Now for profit margin, I decided to go with 30. And I'll tell you exactly why. As of right now, its profit margin is 15%, but it's spending all that capex just like every other company on building out AI related products and services. If it wasn't doing that, it would have an insane profit margin of above 30 very easily. Its products and services are high margin business. It's already built those stuff out for its existing platforms. It doesn't need to spend that capex again and again. So it'll be in a similar situation again with AI stuff by year 2030 comes around. So I decided to go with 30% margin of profit. You could argue it could be lower. I'm gonna say 30. Now let's run the numbers and see what stock price will be. According to analyst projections and some of our own data manipulation based off of historical trends, we're looking at its stock price could be at $628.80 by 2030. This would mean you would have to buy this stock at $314 for you to get a 2x return. Right now, if you were to buy this stock today, based off of analyst projections, you would need to buy this stock at $314. So yes, it is a bit overvalued. Now, I also have to take into account there is no real way to calculate its AI agent stuff. This could be a huge revenue driver where it can hit 70, 80, 90 billion, or it could be something that just kind of competes with the industry average and it just does what analysts are projecting, 50, 60 billion around 2030. So take that into account when you're making your thesis that it does have a high upside as well with this AI agents. I wanted to see what its stock price would be if we were to take into Google's analysis into account and say it would have a revenue of 72 billion by year 2030, then its stock price will be at $811, which would mean you would be getting a 2.4x return if you were to buy it today. I would tend to go with the analyst projection and the other LLMs. I believe Google's one is a bit too bullish, but I also believe what the analysts are projecting is a bit too bearish. Somewhere in between is where its value, in my opinion, will be in year 2030. This sheet is available on my Patreon, so if you want to do some of your own variable manipulation, if you think I'm wrong on anything, or if you believe the analysts are projecting bullishly or bearishly, you can always put your numbers in and see what you get as a stock price by 2030. And lastly, this is just analyzing the stock price. We don't know what the sentiment will hold. People could be overjoyed and the stock could go higher, or people could be very dismissive and the stock price could go lower. With that out of the way, I think this stock is amazing. I think even buying it at this rate, you won't lose any money. You only have an upside with a little downside. But this portfolio and me, I'm aggressive. So I try to buy company stocks when they are at their lows, like I did with Adobe, Google, Broadcom. I usually don't buy a company at fair value. I usually buy it when it goes under value. So it hasn't reached that point for me yet, but I would say this is an excellent company with great products, services, and a bright future. So if you are thinking of buying this company, in my personal opinion, you should wait a little, see if it drops some more to jump in. But if you're really wanting to buy this stock, I don't see a reason why you shouldn't. I really don't. Really solid company with solid fundamentals and a very bright future. Please like, follow, and share this video with as many people as you can so the Common Investor channel can grow and help people. And with that being said, I'll catch you guys in the next one. Peace.